Assalamualaikum, me and my team from Group 7. So our report focus on Malaysia Islamic Capital Market or ICM, which is a well-developed and structured financial ecosystem. We concentrate mainly on Shariah-compliant shares and stock as the key Islamic equity instruments. The report covers the product features and Shariah contract use, as well as the regulatory and compliance framework governed by the Security Commission and the Shariah Advisory Council. We also highlight key market players, provide real example of Islamic funds and trading platform, and discuss the benefits and challenges of investing in Islamic equity. Overall, this study demonstrates Malaysia's leadership in the global Islamic capital market thanks to strong governance, transparency, and continuous innovation in Shariah-compliant investment products. Moving on to the introduction, the Islamic capital market is a vital component of Malaysia's financial system. It provides Shariah-compliant investment opportunities that follow ethical principles and prohibit riba, gharar, and maisir. At the same time, it encourages ethical conduct, transparency, and investment linked to real economic activities. The ICM plays a key role in long-term funding, corporate financing, and sustainable economic growth, serving both Muslim and ethical investors. Malaysia has been recognized globally as a leader in Islamic finance and the Islamic capital market. The leadership is backed by regulatory oversight from the Security Commission and the Shariah Advisory Council, which ensure all products are Shariah compliant. The SSC implements a two-tier screening process, evaluating both the business activities and financial ratio of companies to verify compliance. By 2025, the ICM reached a total value of 2.56 trillion, representing more than 60% of Malaysia capital market. Bursa Malaysia also provides a dedicated platform, Bursa Malaysia I, for end-to-end Shariah-compliant trading and settlement. Our report focused mainly on Shariah-compliant shares and stocks, including the product definition, contracts, regulatory aspect, key market players, real example, and the benefit and challenging in investing in Islamic equities. This highlights Malaysia as a hub for ethical, sustainable, and Shariah-compliant financial development.
Assalamualaikum. My name is Nurul Ain Batisha binti Muhammad Zaini. Okay, for this part, I will explain the product definition of Shariah-compliant stocks, also known as Islamic Capital Market, Shariah-compliant stock, or iStock. Firstly, Shariah-compliant stock refer to ownership of shares in a company whose business activities and financial structure comply with Shariah principle. This means the company must be free from riba, which is interest, or which refer to excessive uncertainty, and maisir, which is gambling. In addition, the company must not be involved in prohibited industries such as alcohol, pork, gambling, or excessive entertainment. Although Shariah-compliant stocks function similarly to conventional stocks, the key difference is that they undergo a special Shariah screening process. This process ensures that investments are made in an ethical, transparent, and socially responsible manner, making it suitable for both Muslim and non-Muslim investors. For example, if an investor buys shares in a technology or healthcare company that does not deal with interest-based financing and earns income from halal activities, that shares can be classified as Shariah-compliant. However, shares in casinos or alcohol manufacturing company would be prohibited. In Malaysia, the identification of Shariah-compliant stock is conducted by the Shariah Advisory Council, or SAC, under the Securities Commission Malaysia. This screening is conducted twice a year. This SAC evaluates the company's annual report, audited financial statements, sources of income, and financing structure. There are two main types of screening. First is business activity screening, where the company's core activities must be permissible, such as real estate, manufacturing, or technology. Second is financial ratio screening, where limits are set. For example, interest-bearing debt must be below 33% and non-permissible income must be below 5%. Based on this assessment, The SSC will decide whether the stock is included, maintained, or removed from the list of Shariah-compliant securities. This list then becomes an important reference for investors and fund managers in Malaysia Islamic Capital Market. Okay, for the next part, I will explain about the Shariah contract that involve in stocks. The first Shariah contract involved in stock is Musyarakah. Musyarakah is the fundamental contract in common stock ownership where multiple parties contribute capital to a business venture. Profits are shared based on an agreed ratio, while losses are borne according to each party's capital contribution. For example, when investors purchase ordinary shares of a Shariah-compliant company listed on Bursa Malaysia, they effectively become partners in the business. If the company generates profit, investors receive dividends, and if the company suffers losses, those losses are shared proportionately based on the number of shares owned. Although shareholders have the right to participate in management, this right can be delegated to appointed managers. This contract reflects fairness because investors share both risk and reward as owners of the company. The second Shariah contract is Mudarabah, which applies when one party provides capital, known as the Rabbumal, while another party, the Mudarib, provides expertise and management. Profits are shared according to a pre-agreed ratio, but any financial loss is borne solely by the capital provider, while the manager loses their effort anytime. This contract allows investors to benefit from professional expertise without involving interest-based financing. Okay, for the next contract is by Al-Salam. Contract in stock trading in Malaysia refers to application of the Salam principle, which allows the forward purchase and sales of Shariah-compliant shares with full payment made at the beginning of the contract. In the Islamic Capital of Malaysia, which is regulated by Securities Commission Malaysia, this contract can be applied to Shariah-compliant listed shares because these stocks are standardized, clearly determined in quantity and quality, and actively traded on Bursa Malaysia. For example, a Shariah-compliant company that urgently needs funds can enter into a buy al-salam contract with an Islamic bank. The bank pays the full purchase price upfront to buy a specific number of Shariah-compliant shares, which will be delivered at a future date. To manage its risk, the bank may use a parallel salam structure by selling shares with the same specification to third party at a high price, without linking the two contracts. This structure complies with Shariah because the price is paid in full at the beginning, which avoids riba. The asset is clearly specific to be avoid error, and the contract does not involve shares owned by specific individuals. And the last Shariah contract involved in stocks is Wakalah. Wakalah is an agency contract where investors appoint an agent, such as a broker or fund manager, to conduct transactions on their behalf. The agent receives a fixed fee for their service, which is permissible in Islam as it does not involve riba or uncertainty. For example, an investor in Bursa Malaysia may appoint a Shariah-compliant broker to buy and sell stocks according to agreed instruction and commission. Wakalah enables investors to participate in the stock market efficiently, even if they lack the expertise to manage investment on their own.
Next, I will discussing the regulation and compliance framework of the Islamic Capital Market in Malaysia by focusing on Shariah-compliant share and stock. This part will be divided into the four main parts, which is the first is the role of the Security Commission Malaysia, second is the Shariah Advisory Council, next is a biannual Shariah-compliant security list, and lastly is the Islamic Stockbroking Services. First is the Security Commission Malaysia. Is the main regulatory authority responsible for overseeing the country's capital market. In the context of Islamic equity investment, the SC ensure that all Shariah-compliant share and stock listed on Bursa Malaysia was strictly aligned to the Shariah principle as well as Malaysia
legal framework, and the SC developed the comprehensive guidelines and set the compliance standards. This ongoing supervision helped maintain the transparency, integrity, and investor confidence within the Islamic capital market. Second is a Sharia Advisory Council, which is SAC, is the highest Sharia authority in Malaysia. It was established under the Central Bank of Malaysia Act 2009, and its role is to issue the binding Sharia rulings that govern the financial institutions and guide the judicial decisions. A key principle enforced by the SSC is a prohibition of riba, which is forbidden in Islam due to its exploitative nature. To ensure the compliance, the SSC applies a two-stage of a screening process. This process is examine the both of the core business activity of a company and its financial ratio, which is particularly to ensure that interest-bearing debt remains within the acceptable limits. Next, to promote a transparency and guide investor, the Security Commission Malaysia publish a Shariah-compliant security list twice a year in May and November. This list serves as the primary reference for investor when making decision to buy, hold, or sell the stock. If the company status changed to non-compliant, investors are required to follow a specific disposal guideline. For example, if the market price exceeds the original investment cost on the effective date, the share must be disposed of immediately, and any excess gain must be donated to the approved charitable organization. This ensures that investment remain free from prohibited elements. Lastly is Islamic stockbroking services. They provide by the licensed participating organization on Bursa Malaysia and play an important role in supporting a Sharia-compliant stock trading. This service ensures that trading activities are conducted using the contract permitted under the Sharia principle. At the same time, they strictly avoid the prohibited element such as riba, excessive speculation or maisir, and uncertainty or gharar. Through the approach, Islamic stockbroking services help to promote the ethical, transparent, and Sharia-compliant trading practice. That's all from me. I will pass to the next presenter.
So now it's the key players in Malaysia part. The first one is retail investor. Usually, they invest not more than 50,000 ringgit. They use publicly accessible information and simple investment instrument to engage in the market as a long-term capital development and to earn a personal wealth gain. Next, the angel investor. They usually invest up to 500,000 ringgit. They are more prepared to take in greater risk in exchange for perhaps larger profit than retail investor. Next is the sophisticated investor. They have no restriction of amount they invested. They operate at a different level where high net worth individual and institutional players, and they have access to true market research and superior financial understanding. Next is the institutional. It actually can be divided into two, which the investor and the issuer. So, for the investor, they usually do high investment volumes with a professional competence. The organization that combine huge quantities of money and invest it in a stock or share like takaful-related fund, pension funds, and hedge funds. Next is the issuer. They usually called as public listing companies or PLCs. This is a legal entity whose shares can be purchased or sold by the public on stock exchange or over-the-counter markets. The ownership of the company allocated among the public shareholders, so they must make their financial and business information publicly available and announced. Next is the market makers. So basically, market makers is there to create liquidity by constantly offering to buy and sell shares at listed bid and ask price. So, their presence reduce price volatility and narrow bid-ask spreads. Unlike traders, they buy and sell stock primarily to profit from price changes and do so without a properly regulated or having license like a market makers. Next is the brokers. The middlemen or intermediaries that execute buy or sells order on behalf of their client is the investor with a commission or fee. They also give stock market access and frequently offer extra services such as analysis, investment counsels, and portfolio oversights. In Malaysia, there are 18 institutional brokers that align with Shariah principles, including BIMB Securities Sdn Berhad, F.N. Huang Investment Bank Berhad, Investment Bank Berhad, and CGS International Securities Malaysia Sdn Berhad. Now, we're going to see the real examples and data. The concept of the list of Sharia-compliant securities was introduced in 1997 by SC. The earliest listing that is recorded by Securities Commission Malaysia's website is from the year 2000, with the total security of 761 and 565 of them are Sharia compliant, which by percentage is 74%, which the majority. So here is the trend for the past 5 years from 2021 to 2025. So all of the year, they managed to be the majority of the total of listing company that issue their stock. In 2021, it is 80% of Shariah compliant, and 2022 79%, 80, and in 2023 82%, in 2024 81%, and lastly for 2025 which is the November 2025 80%. So this is the line graph of the trend for the past 5 years, which from the table before. As with the graph, we can easily see that more by year, more company is confident to participate in Islamic Bursa Malaysia. Here is the 12 sectors that we have in Islamic Bursa Malaysia, which the first one is industrial products and services, consumer products and services, technology, property, construction, energy, plantation, transportation and logistic, healthcare, telecommunication and media, utilities and financial services. For the company's example, I choose from the healthcare sector, which is IHH Healthcare Berhad. So this is the price for the stock that they issued from 2019 until 2023. As in this period, they are constantly having crisis, which is in a period of COVID and the post-COVID. So in COVID period, it was the lowest price, which is RM5.50. Just after 1 year, they already recovered and growth up until RM7.34. The slightly declined to RM6.22 in 2022, but maintaining above RM6 for the next year. This reflect or proven that by being Sharia compliant, it's not just ethically aligned but also competitive in terms of performance within broader equity market.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Shariah and my meeting number is 300,465. For benefits, there are four. First of all is ethical and social alignments. A law for loose Muslim funds and ethical funds is that they exclude harming industries such as gambling, alcohol, financial service, as well as the tobacco industry. This, of course, fits very well with socially responsible investing (SRI) policies. Next, lower risk volatility. Owing to the streamlined financial screening, whereby the total debt to market capitalization ratio does not exceed 30%, the Islamic stocks tend to have companies that are less leveraged. The third one is
strong performance and resilience. Based on data from 2024 and 2025, Shariah-compliant index such as the FBN Hijrah Shariah Index have shown a remarkable level of resilience. For the first half of 2025, sustainable and Shariah-related equity funds in Malaysia registered a median return of 12.5%. And the last one is fully compliant Sharia-based environment. Bursa Malaysia in Malaysia practice the halal environment from the contract to settlement, thereby ensuring the avoidance of even the interest on cash in the trading account. Next, I will present about challenges. The first challenge is limited investment universe. Excluding conventional banks and existing stocks that tend to have high dividend yields could indeed limit diversification opportunities. As a portfolio becomes overweight in certain sectors like technology, healthcare, and plantation, a high liquidity financial sector could be mixed. Next, Sharia non-compliant risk, which is the portfolio stocks are screened twice a year. If the firm is found to be in breach of screening requirements, for example, debt ratio exceeds the 30% level, the firm will be categorized as non-Sharia compliant. The third one is purification dilemma. Even for organizations adhering to Sharia principles, there can exist a small company known as impure earnings, such as earning on a corporate current account at a bank. It is up to the investor to claim their dividend earnings by contributing their forbidden earnings, which can at most reach 5% of the total earnings to a charitable institution. And the last one is regulatory fragmentation. Even as a world leader, various geographical regions, for example the Middle East, may have various sets of screening. This leads to inconsistency for foreign investors seeking a universal standard for Sharia. That's all from me. Thank you.
In conclusion, Malaysia Islamic Capital Market is well regulated, devised and globally recognized. Governed by the Securities Commission and Sharia Advisory Council ensure transparency and investor confidence. Sharia-compliant shares use contracts like musyarakah, mudharabah, wakalah and bai'as-salam, which ensure ethical investment and avoid prohibited elements such as riba, gharar and maisir. Structured Sharia screening strengthens market integrity. The market ecosystem, including brokers, market makers, and institutional and retail investors, supports resilience and competitiveness. Sharia-compliant equities are ethically aligned and financially stable even in economic uncertainty. Challenges like limited sector diversification and different Sharia interpretations remain, but improvements in education, disclosure, and harmonization keep Malaysia a global leader in Islamic finance. Thank you.